I'm Dan Fitzpatrick, stockmarketmentor.com, and this is Friday, January 8th. This is the 3 Stocks I Saw on TV video series, which I just started to do again. It's backed by popular demand because I thought it was pretty popular, so I demanded it. You'll see it be a little more fancy in the future, though not too much. I'm just keeping it real. So 3 stocks I'm looking at today is Apple, FedEx, and Microsoft, and this is why. Big deal this morning on CNBC about Apple's up over 1%, but let's just look at this thing. And I've been covering this on my free chart of the day video for a while. And by the way, I'm not down on Apple, the company, or anything like that. I just think the chart kind of stinks. The fact that this stock is down as much as it is, and then rallied today, like gapped up, nice gap up, right? It gapped up, but then it hasn't held that gap. And I'm doing this with an hour left to go in the week. But my bet is you're not going to see a big buy-in spree into the close. Why would anybody really want to do that before the weekend? But even if they do, this is a stock that's probably not going lower in the short term. Nor, though, is this a capitulation. This is not a capitulation. This is not that. So I think if you want to buy Apple, you're really impressed with a whopping 2.2% dividend yield. If you want to buy Apple, you have plenty of time to do that. $100, which had been a floor for like half a day, is now a ceiling. So there's not a lot of upside in this stock to buy right now. There's just not. You look at it on the weekly chart, this looks like a lawn dart that's reached its zenith and now is looking for either your foot or that little circle on the grass. So this stock is definitely going lower, but short term, I don't really think it is. So think about it this way, and then I got to move on. If you're buying the stock, you're buying it because you think it's going higher. Now, some people, and hopefully this doesn't apply to you, but if it does, let's make sure it doesn't happen this way in the future. Some people buy a stock because they just kind of can't help it, and it's like, oh, I haven't done a trade yet today, or I haven't done anything this week, so I'm going to just go ahead and buy some Apple. Don't do that. Apple doesn't care whether you own it or not. Instead, let the price pattern dictate what you're doing. And right here with Apple, this is about as much of an inside day as you can have here. It's just indecision. So you don't want to be buying Apple, nor do you really want to be shorting it. It's oversold. It's just oversold. So this is really a do-nothing stock. Now, if the company reports earnings, the stock rallies up and then peters out, this is a short the snot out of it stock, okay? But nothing right now. FedEx. Nice. Regulators approved their deal to buy TNT Express over in Europe. So the stock's up a bit today. This is really a broken stock. I mean, it has been for a while. I want you to be careful about this. It is also an inside day. These inside days can tend to be kind of continuation days. So if this stock starts falling back below, we'll say 134.50, you want to get out of the stock. This is another one like Apple. It's going lower. It's too early to buy. I wouldn't want to short it either. Just like I'm glad they bought TNT Express. Doesn't make me want to buy them. Okay, now Microsoft, a little bit different deal here. BMO initiated coverage with an outperform, right? So the stock's up a bit today, okay, 1.3%. But, so are a lot of other stocks. The market's oversold. Here's the problem with Microsoft, though. It's a lot of resistance right here. The stock's actually performed really well. And considering the fact that it's Microsoft is pretty darn impressive. They're like the McDonald's of software. Anyway, I don't even know what that means. But with this one, this is a short-term low. The stock, again, is kind of overbought, but it's back below the 50-day moving average. So I want you to think about this. Is this a good time to be buying Microsoft? Is this a good opportunity? No, because it doesn't, on a short-term basis, it doesn't have a lot of upside because this is where all the resistance lies, right here. Also, it's not a great It needs to drift way, way, way below resistance. So at least you have an opportunity to make some money. You don't really have an opportunity to make some money here. So stay away from Microsoft. It's got an okay dividend. But again, it's Microsoft. Their better days, frankly, at least to me, seem like they're behind them. The deal was, oh, well, they're taking cloud computing or whatever really seriously. Really? Well, that's great. Well, welcome to the new millennium. So anyway, these were just 3 stocks that I saw on, on CNBC and on their website this morning, so I thought I'd cover them. But doesn't it make sense to you that with the S&P not really doing too well, that the 3 stocks that I'm looking at are not really going to be stocks that I'm saying buy, buy, buy. Instead, I'm saying just stay away, stay away, stay away. Wait for your entry. It ain't here now. Okay, this is my 3 stocks I saw on TV video series. Watch for them because we're going to be doing more of them. And by the way, if you like them, send them to your friends. Get them to subscribe to our email list or our YouTube channel, okay? I want more viewers.